Remember, you can join my training room underneath with the link. So, yeah, I mentioned it long here in line with key support to the downside. This came off the back of jobs data in the US. Okay, you had stronger jobs data, makes the Fed not want to start to ease so early. Okay, because people are going to have more money if they're employed and they're getting paid more or less. It feeds into inflation. So you then rose in line again, like I was saying earlier on this stream, you rose in line with key price action. There's tons of it. There's tons of rejection all around this area. And again, you copied that and it falls. And you're now on your way down. So if you wanted to short it, you're too late. You should have done it earlier. Don't sell now. Okay. Again, if you're shorting now and you don't understand the correlation of time frames and areas for entry and exit, you will be taking an improbable entry. If you short now, you're selling into support, which makes it improbable. Okay. All about probabilities. It may be the case that it falls. Okay, but it's likely it will bounce before then, at least on your nearer time frames. If you don't get anything news-wise this week, you will probably drift down here and then up here, and you would just stick between this really, really tight, boring range that no one likes that started, into the third week of Jan. We're almost in the second, so another week of this, and you will just be going sideways. But you can see in the long term what's happening to this asset, this FX pair. Started really 2014 viciously, and then you're just going down and down and down and down and down. So I should think until you get a real change in rhetoric from the Fed, massive change, and the jobs data didn't help, you may continue that downwards trajectory. It certainly looks weak, to say the least. That green candle, immediate rejection, okay, and you're downtrending as well. That is more or less the similar sort of outlook you had around here and what happened before. Okay, every push just declined. No, it says. So if you extend lower again, just to filter out the noise, I like to put my time frames up. Okay, if you end up getting down here like that, and then it's still weak, and then you get down here and slowly crumble and crumble and crumble, again, this would rely on US data. And the Fed, they said they want to look at the data, and the first data that came out was going against what they'd said. So, if that continues and you see weakness like you have for absolutely ages, then you may pull down to these areas. In any case, trading New Zealand dollar and AUD dollar, for example, I like to do it in the same way I would short a massively rallying market, because you're crumbling down and down and down with extreme weakness. Now, you do find once you reach these points and the rhetoric completely changes, you get these massive pushes up. So that is the kind of thing you're hunting for. That would come at an extreme point in line with probability, again, like I mentioned. Okay. If in an extreme case you do end up there, it would require a lot, I think. But even in the midterm, you can see it's just got no strength in it. It's trying its hardest, but it's slowly crumbling. So any entries, like I said, I would make them light. I would spread them out. I'm not desperately ever going to buy into this, okay, because it's weak, very weak. And like I said, you would need a big change in rhetoric to change that. Okay, so just be careful on that end. New Zealand rates. You can look at the rhetoric from the Reserve Bank. They follow really the Fed. To be honest, they follow what the Fed is doing, but you can still see the strength is with the US dollar. That's why you're coming down, and it's the same on other US pairs. It's just the difference with AUD and New Zealand is that they're very weak, very, very weak. They are coming down over a longer period like the rest of the US pairs, but these are especially weak because every single push up is leading to rejection immediately. And that tells you that there's far more strength for the US dollar than there is for your AUD, than there is for your New Zealand. Okay, and that's why you keep coming down and down and down, and the probability, therefore, like I said, is against you unless you're shorting. But again, your shorts would have to be tied to inherent risk. Like I said, if you look at the euro US dollar, for example, there's a big deviation here. It's a lot more stretched out. It is coming down over time, but you can see the peaks and troughs happen over longer periods. It's not choppy. It's not choppy and weak. If you do get a push up, you get a big push up. It's significant. Okay, so it's a lot different. There's a lot more strength over time for these assets. And if you want to read into why that is, you can simply Google it or go on any economic news or forum, and they'll tell you exactly how the macroeconomics exists for these areas and how it works. Okay, but every rebound is significant, more or less. It's got power behind it and it's giving you reasonable moves. But if you look at those antipodeans, okay, New Zealand and AUD, they're not like that. Again, your pound, you've got reasonable, it's a little bit tighter. It's a little bit like your AUD and New Zealand. It's not as strong as the euro, but still there's a bit of a break in every single push to the upside. Okay, so if you do get continued dollar strength, anything down here, you might look to re-long lightly so you can hedge out of it. Anything up here, you may look to short. That's the extreme long-term risk-averse case. But the focus is on the antipodeans because they're moving more. Anything up to the top side, I like it short. Anything down, I like it long. If you don't get any significant movement, that is what you'll probably have. Sideways, 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 until it looks like the Fed will ease more. Rates may come down quicker than they will in the UK, for example, and your Great British Pound rises, therefore. That's why you're rising now. That's why Euro has as well. Okay, it will be the case that if the Fed decides to ease quicker, people aren't going to save their money in dollars because they'll choose alternate currencies to do so. Okay, of course, giving it strength. But again, you don't know that until you get clear direction on it. At this point, you don't have that because there's no market news. And if it becomes the case that this week all these red tag events are boring and don't give you any other indication, it will continue. Hopefully that won't happen. I really don't like it when the markets are boring, as many as you can probably imagine. So we'll just have to wait and see what occurs. But nonetheless, those are my planned areas for your dollars. So